Okay, today is June the 6th. It's Saturday, so it's statistics time. I'm Richard Calhoun with Creekside Realty. A lot of this stuff is getting familiar to you, but today's handouts are posted. The root URL for all my information for this statistical stuff is this stuff that's underlined, tinyurl.com/RE market singular, graphs plural S. And then for the handout, it's the handout, the 8-digit year, month, date code. Then if you want to get to future meetings, you just put in the future date. So next week would be the 13th of June. If you want to get to the archived meetings, you just go truncate everything and you go to graphs. I have not posted this yet, but I hope to get a background video up pretty soon, and it would be background. So moving on. Basically, this is just a cleaner version. One thing that I was going to add in this week, if people come up with an interesting media article that they want me to talk about, if they send it to me ahead of time at creeksiderealty@gmail.com, I'd be happy to do that. And the reason for offering this is there's a lot of different information out there, and a lot of it's very confusing. And I think most of the time I can explain where people are coming from. What we're going to start off looking at is the macro view of Silicon Valley. The whole purpose of this is to find out what's happening with COVID-19. And what we look at is Santa Clara and San Mateo counties. We look at single family homes and condos and townhouses. We look at the recent activity from last Saturday, starting at 12:01 a.m. through Friday, just 9 hours ago at 11:59. Reason for that is it's the most current data available. Closings still have a 30-day on average delay because of the length of escrow. Sales are going to be a 7-day delay for the reporting period. Finally, the current activity. Here, sales prices, again, basically it's flat. With 1 week of data, it bounces a lot, and with the different types of property as you have a change in the marketplace. And for example, if someone was to say the low end of the marketplace is getting impacted more than the upper end, that would actually tend to cause prices to go up. And the reason for that is you're losing all the low end prices that would hold it down. But right now, it seems like all the price ranges, the 10 percentile, the median, the 50 percentile that most people follow, and the upper are all basically flat with fluctuations. Overbidding, basically flat. You know, we did go down a little bit on the frequency of overbidding this week. But I think what we're dealing with is we're still, because of the length of time for houses to come on the market, for the time for buyers to decide to write up an offer, for the time the offer is presented, for escrow to close, I think we're still looking through the stuff that we couldn't really show the properties very well at. So I think that that number is going to go up, but basically it's flat. You might say it's been statistically fluctuation. The magnitude of overbidding is basically flat in just over 100%. But not up at like 102. I think it's about 101.4 from memory. This data, I was surprised. I actually didn't update it last week, so it has now not been updated for 2 weeks in a row, and I do plan on bringing that back, but I included it just to keep it there. Basically, what this looks is at the sale price to list price distribution, and you can see pre-shelter in place, it was up here, shelter in place, we came down, and then the 3 weeks, May 9th, May 16th, and May 23rd, it was basically bottomed out, and it's, by May 23rd, it was improving. I think we're going to see that this is improving some more. One thing that I will make a note, the May 23rd date, the median sale date on that was April 29th. So that gives you an idea of the lag time in this data. There's an extra 2 weeks just because I don't have the current data. The gold line is sort of the gold standard. I went back and I took 5 years, and then I took the median of the 5 years, and you know, some reference. A lot of people use year over year. To me, this is superior year over year, because what happens if last year was a particularly good year or a particularly bad year? And I will comment that the last 5 years have all been exceptionally good. So the fact that we're anywhere around normal for a good year is, again, another good year. This is a point that I had some frustration with a person that will go nameless at this point, and that is they believe you have to compare quarter over quarter or month over month. And I said there is no difference between comparing a quarter over quarter, month over month, or week over week. And I'm not comparing last week to this week. I'm comparing week 22 of this year, 2020, to week 22 of 2019. And that is just as valid and in some degree a better mark, because I do absolutely agree you need about 5 data points to really establish a trend. The earliest is 3, and that's pretty shaky ground. So by doing weekly durations, you can determine trends much more quickly. Red line is the percentage. This is the number of new listings that have come on the market. So this gives you an idea of how many sellers are flooding or staying away from the marketplace. And again, it's the blue line that's the data. So we're just below the gold. So you're just below 100%, which is the red line. But again, you have roughly the number of sellers you would expect. You lost out a whole bunch of sellers here when shelter in place first happened, or they're not flooding on the market all at once. And so the market remains in balance. This is the number of new offers that were accepted during the last week, since I did misspeak. So the inventory is following just about 100%, 102%, well, actually more like 110% of what it would normally be at this time of the year, not the number of offers accepted. So now we move on to offers accepted. The blue line is the data, and we're below where we should be. This week, you know, we're at 90%, 85, 87% of the 5-year normal. We're down here at somewhere just under 400 homes, maybe 385 homes sold in the last week. The normal number would have been up here somewhere around 450 maybe. So there is a little bit of a drop, which is why the percentage is down over last year. So I'm sorry for the misspeaking earlier. Number of closings, this is way down because of the lag time of shelter in place. And you can see we actually closed fewer last week than we did the week before. And this isn't because people aren't coming on the market. This is because we're still working through the normal duration of escrows. So very shortly, I'd expect this to turn around and start going up again, because we have been selling more homes, as you can see on this rapidly up increase. So basically, you can see we went rapidly down on offers accepted, rapidly up. The closings are coming rapidly down, and they're not going rapidly up yet because they're bouncing along the bottom, but pretty soon they have to go up because the escrows are going somewhere. Number of expired listings, we went way up last week, and that was because you can see the gold standard went up the week before. Just the way the calendar fell, the end of the month when a lot of agents expire listings happened this week's data, where for most of the 5 years, it would have been in the previous week data. And that's a perfect example of one reason why you take a 5-year median, is you tend to minimize the spikes, because you can see how radical it is. I'm not particularly concerned, but it does indicate we're having a few more listings expire than you would expect. But in a slower, difficult marketplace, that is what you would expect to happen. Moving on to cancellations for the week, you can see that we're running slightly below the 5-year median. So if we were running on the 5-year median, it would be right on the red horizontal line. If we were having more cancellations, it would be above. So this is sellers that are saying, hey, I'm giving up on the market. Let's cancel the listing agreement. I'm unhappy with what you're doing, those kinds of things. So they're a little bit below, inventory is a little bit above, so the rate of cancellation is actually lower. Now you can see right when shelter in place happened, it went off the chart, literally and figuratively, but it was very short time frame. Withdrawn listings, I don't have any of the historical data on this, and I can't get it because the MLS considers withdrawn listings to be a temporary status, so the data becomes an expired listing once that expiration date looks around. This data I just do, it's a little confusing, but it compares each one of the components to the 5-year normal being the red horizontal line. So you can pick whatever you think is the most important and see if you have more or less of that particular component. Now we're going to go into the micro markets. So that was a focus on the macro. What's the Valley doing, Silicon Valley real estate wise? And frankly, it looks pretty healthy. Now we're going to come back and look at the micro markets. And these are my heat maps, and we're going to be looking at two things. We're going to be looking at overbidding first, because that's older data because it requires sale price. Then we're going to look at days of unsold inventory. So here we go. This is 5 weeks ago on May 9th. Red is a red hot marketplace. Gray is a balanced marketplace. And the blue is a cool marketplace. So as I step through, we're coming forward a week. But now remember, because these are closings, there's an additional 5-week delay. So this is about where the market was almost 10 weeks ago. Here's 9 weeks ago. And now you can see that it changed a little bit. And now you can see where we are today. And so this is probably the coolest because all your red areas here, or a lot of them, disappeared. So right now, what's closing is sort of the worst we've been with no signs of improvement. Now we're going to shift to days on unsold inventory. This is much more reflective of what's happening now because I look at the rate of sales this past week. So even though we're talking about current as if it's current, it's actually that most of the activity that I'm reporting on actually happened last weekend. And the reason I've selected to report this on Saturdays was so you'd have this information going into this weekend. So even though I'm saying it's current, it's still basically a whole week outdated. So here we're going back 5 weeks, a lot of gray, some red, and a big section of blue right along the Santa Clara San Mateo County border. Here we go 1 week more recently on the 16th, the 23rd. You can start seeing the blue is shrunk down. Santa Clara County went from blue to gray. You can see the red has grown up quite a bit. Here's last week, and here's this week. The one shift in the wrong direction was this North County area of San Mateo County. But I will tell you that it's a very small difference, which is one of the reasons I've in the past resisted graphs like this, is there's no indication, because I think the number here is like 43 days of unsold inventory. And if it was 40 or less, it would have been a red area up here. And I think it was 39. So there's been a 10% shift, but that causes the color graph to shift. And you have to draw the line somewhere. At least I don't have the skill set to do shades of graphs, which maybe I'll learn at some point. Now let's look at each of the components. Here's the micro market data. You can see each of the 22 different micro market areas. This graph is pretty hard to understand, so we'll focus on this one, which is why I have it highlighted up at the top. Each graph is numbered down here in the lower right-hand corner, so if you have questions, pay attention to what slide number it is, and then we can come back to it. Basically, you can see the components of each county, and when I say each county, the yellow line is actually Santa Clara County townhouses, and then the gray line is San Mateo County single family, and the red line is Santa Clara single family homes, which I think is the most significant. The trend, remember DUI, days of unsold inventory, as it goes up, the market's slowing down. So here's shelter in place. It looked like it continued for a while, but that was just because that first week, things that were in process did pretty much continue. But the next weekend, the weekend of about March the 20th, buyers weren't going out and looking at houses, and the market slowed down. Here you can see right around May the 1st, it basically turned around and shifted gears, and it's been improving every week since that. Here's each one of the different areas, and I stepped through those pretty quick just so you can go back and freeze frame it. This one is the available inventory. Again, this is without an accepted offer, all 22 micro market areas. Here I can explain it because the 3 county ones stand out because they're the largest geographical area. Basically, you can see that inventory was going up way back here. Shelter in place happened. There was a dip down, and we basically are resuming the normal trend, and we're basically at the back end, back on normal trends, but we've never made up for this lost activity here. I know a lot of people are talking about it being delayed a couple months. I don't think so. I think people have gotten on with their lives, and a lot of people that were selling in this period of time were optional, and they're going to defer a year. People that were coming on this year, some of them will defer a year, and the people that had to sell back here with shelter in place have come on to make up for the difference. So from a market point of view, it's basically a normal year once we got past about May 1st, maybe May 10th, because May 1st is a little premature. So maybe middle of May onward, we're basically where the market was, almost as if shelter in place never happened, which is incredible when you think about it, especially considering all the hoops we still have to jump through. So there's the county data: Santa Clara County single family, San Mateo single family, townhouse condo in both counties. Offers accepted. Again, I'll look at it with everything. Of course, as offers go down, the market slows, and you can see it basically occurred right with shelter in place. We had been going up, shelter in place announced, offers have come down, boom, right here around May 1st was sort of the bottom of the marketplace. Then you come out here to May 9th, something of that order, and you're clearly on the way up. I also think I understand why in the past I've been concerned about my accuracy of my data here for 1 week. I think with 1 week for number of offers accepted and closings, there's enough lag from agents reporting uh, sales and closings to the MLS that when I'm only looking at the past 7 days, I'm missing some of them. And so the 1 week is going to tend to be low. And if you just think about it, if someone had an escrow closing Friday and they're going to report it later today, I already cut off Friday's stuff 9 hours ago, and that sale is missing. So I'm thinking that this 1 week is probably pretty insignificant, and I'm thinking maybe changing it to 2 and 4 weeks going forward, but I want to see how much of an issue that is. And I don't think it's an issue at all. I don't have to do anything retroactive because they get overridden automatically anyway. So we'll probably start looking at 4 weeks and 2 weeks data to get it more accurate. Here's the county: Santa Clara, San Mateo, condo townhouse, closed transactions. Again, this is the last one we'll look at all. You can see closings. They basically continue to go up after shelter in place, and that's because of the time lag. You can see they came down more gradually, and that's because it spreads it over time. You can see it turned around and started to go up a little bit. Then we spiked up and then down, and the flat point, since I didn't mention it, is that's your 3 week data point. That's your 1 week data point. All these data points backwards are 5 weeks. County data, Santa Clara County data, San Mateo County. Now we're going to look at frequency of overbidding, and because now all the data is on top of one another, it's pretty hard to pick it out. You can see Santa Clara County in the red. The red is Santa Clara County. Pretty hard to see the trend, but you can see the trend with the red line. Here is the data where it's actually cleaned up. So now you're looking at the county data only. Single family homes, yellow is condo townhouses in Santa Clara County, and the gray line is San Mateo County single family homes. So frequency of overbidding, it was going up, continued to go up as escrows closed, and then turned around and went down. Here is Santa Clara County data. Here is San Mateo County data. Here is condo data. Now we're going to magnitude of overbidding. So frequency is how often, magnitude is how much do the buyers feel they need to go over. Same concept, it's hard to see, so we'll go to county data. And again, you can see data went up after shelter in place, and that's just because of the lagging. The contracts were sort of in cement. Then you can see we came way down, and now you can see we're starting to sort of bottom out. And I think going forward, we're going to see this trend going up. And that's why I was talking about, I think the closings are still just sort of right at that bottom, and we haven't seen the upturn yet. Here is Santa Clara County data, San Mateo County, townhouse data. Now we're going to move on to sale price that everybody likes to follow. This is the 10 percentile pricing. Most people don't report this. 10 percentile is what is the bottom 10% of homes doing in each marketplace. And again, just like median, it's pretty flat. This is your condos. Of course, they're the cheapest, Santa Clara County condos. Then you have Santa Clara single family homes, and then you have San Mateo. And if you look at San Mateo, you can actually, I think, somewhat argue that the prices here were higher than they are now. And based on anecdotal data, I actually think this was some overshoot where the market for a few short weeks was high enough that it couldn't support it. And I would actually speculate would have come down even had shelter in place not occurred. And part of the reason I'm comfortable sort of saying that is I had a conversation with an agent in early March, before shelter in place, on the fact that a broker in Palo Alto, Menlo Park, was complaining about the prices were coming down. And I did some data focused on that, which I thought was one-time data, which tended to suggest prices were hyperly overpriced for a short period of time. And I think that's what we're seeing here versus the market really coming down. And if you think about it, if you go back further, look at the level here, they're basically on the same level in all of them, with them all being slightly up, where this would have been just way too far up. Here is Santa Clara County data, San Mateo County, condo townhouse. Now we're moving on to the median sale price, which is what everybody reports. And the reason to do the 10 percentile, and we'll get to it, the 90, is now you can say that this is what 80% of the homes are doing. They're somewhere in that bandwidth. And the vast majority, 80% of your buyers are going to be, and consumers are going to be in that bandwidth, where if you only have the midpoint, you don't define what's going on with the outlying areas. And again, the pattern is the same with the 10 percentile and 90 percentile, which is not always the case, but prices are up a little bit higher than shelter in place. They peaked shortly after shelter in place, then they came down. Condos in Santa Clara County, you could maybe argue, are up a little bit, but remember, this is sort of fudge data because it's only 3 weeks and 1 week. And 1 week, you're having the escrows that tended to close earlier, and so they could be more cash transactions, and people had to be aggressive. So again, the last 6 days here, you can't do it. And I did 3 days at each level, so they stood out. Now moving on to Santa Clara, San Mateo, condo townhouse, and now the 90 percentile that we talked about. Here's the county data. And when you get a huge spike up like that, basically what this is indicating is, since we only looked at 1 week, you could either have a low number of volume of houses, or you could have a situation where a lot of expensive homes sold. But that clearly is a jump up. You know, if you went back 3 weeks, it's right here. 1 week, it's real right there, where your other's going to go anywhere. The 90 percentile is going to fluctuate more than the 10 percentile, even though it's 10% of the homes. And that's because the sale prices are higher and cause more fluctuation. Santa Clara County, San Mateo County, condo townhouse, duration of escrow. Basically, duration of escrow is interesting to watch because a lot of people report pending sales, and pending sales are things that are in escrow. And if you have a pandemic that causes your escrows to increase duration, you now have properties that are in escrow for a longer period of time, and it looks like you have more pending sales, when in fact what you have are the same number of pending sales that are now taking 20% longer to close. And if you look at San Mateo County, that's exactly what happened. You went from 25 days up to 30, an increase on 5 on a basis of 25 is a 20% increase in duration, which would reflect in a 20% increase in pending transactions. One of many reasons I only look at offers accepted and not pending. And pending actually was introduced sometime around 2007, 8. And it was a crazy concept, but it's taken hold and people report on it. And I understand it's easier for people to get that data themselves, but it's meaningless data, and meaningless data that's easy to get isn't worth getting. Santa Clara County, San Mateo County, condo townhouse, on the median days on the market. We're going to do this pretty quickly because, again, this is meaningless data. And the reason it's meaningless is the MLS froze days on market during the pandemic, which explains why all the countywide data got down to 0. That means they were basically, half the homes were listing post shelter in place that were getting offers accepted or in closing. And now you can see it's going back up. You can see the days is back up almost to where we were pre-pandemic. Now what's going to be interesting to do is to see in another couple weeks, is it going to climb up higher? And I would expect it to climb up somewhat higher, but not significantly higher. Time will tell. Santa Clara, San Mateo. Now this is the table that we looked at. So this is the micro market, and this allows you to come in and look at any given period. Some of the things that are important, in my opinion, this is the magnitude of overbidding here. This is the frequency of overbidding in column W. Column AA is the 10 percentile. AC is the 90 percentile. Days of unsold inventory is over here in column R. So this is single family homes in Santa Clara County. This is San Mateo County. This is condo townhouse. This data is a little early, but it's not going to change. This is the data for the month of May, which started on May 1st and went for 35 days. So I was able to get the data on June the 5th and process it, and you can start looking out and picking out your favorite data point and comparing on how it did. And that's the end of the presentation. I do have a little bit of a sneak preview of monthly data. So this is going to be sale price, and this is the 10 and 90 percentile. And now you can see in this number here that are on the screen are the number for the month of May. And again, my May is May 1st for 35 days to get rid of some of the cyclicness. Then moving on, and this is on a logarithmic scale. And the reason this is important is the slope of the line tells you the rate of appreciation. So you can see from basically 2009 through 2018, we were on a very rapid up. And then starting in 2018 onward, we've been basically flat. So 18 and 19 were great years. Everything was selling, but prices really weren't going up. Here is the same data on the format that more people are familiar with, which is, a normal analog scale. But the data should be the same. The horizontal lines correspond to the previous peak. So this is the peak in 2007 and 8 time frame. So you can see how much appreciation we've had over that period of time. And to make it more readable, this is the same scale for the last 10 years. Now we look at the sale price to list price ratio, and we're looking at down here in the sort of the lower third of the screen, we're looking at the frequency of overbidding. And so you can see the frequency of overbidding is down at 48%. That's down significantly from last month. And that's one of the disadvantages of only monthly data. And it looks like April was in between. I'm not picking up where the data point was. And that's one of the advantages of doing it weekly, is you have the points in between to see what's happening. And here's the magnitude of overbidding. And it looks like the number is 100.5%. So just over most sellers getting what they're asking price. Same information blown out for the last 10 years. This is sort of a nod to overbid, underbid ratio. I don't see it being that significant because, and that's this yellow line, as it goes up, the market's improving. As it comes down, it's getting worse. But the purple line does the same thing. But the argument is, look at how much the yellow line has gone from here up to here. It's gone up significantly. At the same time, the pink line has only gone from here to here. So they're saying that the yellow line is more noticeable. I believe the pink line myself is actually as noticeable or noticeable enough, and there's no reason to go through the extra perturbations. That's the same data again on a 10-year scale. The first slide is basically 20 years. Second slide is basically 10 years. That's what the difference is. Days of unsold inventory. And this to me is the key. And that is the blue line here. Below the red line is by definition of a red hot seller's marketplace. Between the red line and the blue line is a balanced marketplace. And above the blue line is a buyer's marketplace. So it's the navy line that's the real key line. The future line and the yellow line are the median and average days on the market. And you can see they tanked. And the reason they tanked, which is normally a good thing, is not because the market improved, but it's because the MLS froze the days on the market. And you can see the last data point here now is going in the upward direction, while days on market is continuing to plummet. So between that conflicting information, because the MLS froze the data, I know this was artificially low. The only number that has any meaning whatsoever is the days of unsold inventory that's dropping, which is an improving marketplace. So if people are making conclusions on days on market, you need to find out if they're using actual days on market or the days on market published by the MLS, which is artificially low because it was frozen. So basically, and I don't remember the time frames, but it was something like the data from March 16th when they actually, I think they started March 17th, the day that the shelter in place took effect. If they were in a freeze, I think they should have done it with the announcement, but that's a minor point. And then they opened it up. I think it was on May 19th. It was a Saturday. And I think May 16th, I think it was. And I think it just happened to turn into be 2 months later. I think that's correct because May 16th is a Saturday, but I could be wrong, but it was somewhere in that time frame. So basically for 2 months, You didn't have any days on unsold inventory or days on market counting. So days on market for some listings are now up to 60 days low. They did that to prevent people from canceling listings, not to have it increase. So there's 10 years. So basically from 2012 onward, we've been mostly in a seller's marketplace. You can see up to last year, we came out a little bit into the low end of a balanced marketplace. Now we move on to averages. And again, I'm going to move out to the 10-year data because it gives you a better feel of what's going on. I'm now looking at inventory now compared to the past 12 months. So I look at data for April through May of last year and compare it to what we are now. And you can see the data now is going down, and that makes sense because with shelter in place, people came off the marketplace. Days of unsold inventory went way down last year, was going up this year at the beginning part of the year, then it leveled off. It really didn't get impacted by shelter in place. It didn't go crazy. An interesting observation. Offers accepted are the red line, and you can see it plummeted, and the gold line are closings, and they're dropping down. This is the same data, a little cleaned up. This graph here plots the 90 percentile in fuchsia and the 10 percentile in deep blue compared to the median. So when you have the lines coming together as you did right through this time frame, basically right in like January of 2006, these lines got closer together. That's price compression. Then you can see with the meltdown in the low end happening first in February of 2007 and the high end not melting down until about August of 2008, they actually did price expansion because the lines got further apart. And you can see we're coming back to a little bit more price compression, but we're nowhere near where we were in this time frame. And I think part of the reason we were so close together in that time frame, that's when liar loans were really common. Liar loans were loans where the buyer could self-document what income and not what credit, but what income they had, and the lender took their word for it. So people could buy homes with 100% financing, lie about their income, and there are stories that I know of people that were making minimum wage buying $1 million home and living in it for a couple years and then losing it to foreclosure. Sad events, but lenders should have been smart enough to know that would have happened, but I guess they were worried about making the profit at the moment, not the long-term effects. Next week, we'll do an abbreviated portion for the weekly data and spend time going over the monthly. So you guys have a preview of it, and it is on the handout, but I'm open for any questions at all. Just going to share this slide real quick, make it painfully clear. If you want to get the archives of this meeting, you just go to tinyurl.com/RE for real estate, market, singular, graphs, plural, and it takes you to the YouTube channel. And it takes me a couple hours to get this posted, but this and all the previous sessions are up there. The handout for this week's thing, if you want all 110 slides, all of them are up there, including the goofed up ones. It's tinyurl.com/RE market graphs handout, today's date 2020-06-06. Then if you want to come to the future meetings, here is the whole URL link. You can get on through Zoom. I'd like to talk more about media coverage. If anybody has articles, I would appreciate it being sent to me ahead of time so I can try to dig into it, because it's almost always a definition. Here's my email address so you can reach out to me with anything. And with that, I think it's a wrap unless someone else has a question. And if you can do it verbally, I'd prefer that versus have to going over to the chat room. So I'll shut up and listen for anyone to unmic. All right, no one's unmiking apparently. We have a minute and 40 seconds left, but I will end the meeting unless anyone speaks up quickly.